This is Forbes magazine's the 14th of February 2023 edition. The cover page reads America's Best Banks. On the list is Silicon Valley Bank, known as SVB, at number 23, and it has been consistent on the list for 5 years in a row. It was the 16th largest bank in the United States. Yet, in a few short weeks after the publication, SVB will go into flames in the course of a couple of days.
A rough week for the banking industry.
The second biggest bank collapse in U.S.
The collapse of Silicon Valley Bank.
Another bank failed in the same week as SVB, Silvergate Bank. 3 huge banks collapsed almost together, including Signature Bank, another bank that starts with an S. Each of these financial institutions had established a reputation for serving specific customer bases. While SVB had built a clientele primarily consisting of tech startups, Silvergate and Signature Bank were notable for their focus on catering to cryptocurrency companies. The collapse of these 2 banks, known for their crypto-friendly services, raises questions about the implications for the cryptocurrency industry. So what does this mean for crypto? To understand the consequences of this crash, we need to know how it started. Let's start with a bit of background. Signature and Silvergate banks were no ordinary banks. They were the go-to bank for crypto companies. In 2013, the CEO of Silvergate Bank, Alan Lane, personally invested in Bitcoin and saw its potential for the cryptocurrency market. In 2016, Silvergate Bank became a crypto bank when it launched an initiative to start serving crypto clients. Previously, many banks were hesitant to work with cryptocurrency companies due to the perceived risk of fraud and money laundering activities. This made it difficult for crypto companies to open a bank account. As if that wasn't enough, they often faced high fees and restrictive terms. In some cases, cryptocurrency companies were unable to open bank accounts at all. This imposed some challenges on their business growth. The arrival of Silvergate changed all that. Silvergate was one of the first banks to offer services to cryptocurrency companies and quickly became an industry leader. It saw the potential of the crypto market and took all the risk of working with crypto companies offering their services. However, Silvergate Bank's success made it a target for regulators. In 2022, the bank was fined $100 million for allegedly failing to monitor its cryptocurrency clients. The fine was the largest ever imposed by the regulator on a bank for crypto-related violations. They offered their services to Coinbase, Crypto.com, Paxos, you name it. Then the parent company of Silvergate Bank announced that it would cease operations and liquidate the bank. The decision was a result of substantial losses amounting to $1 billion incurred by the crypto-friendly bank during the final quarter of 2022. The losses were primarily attributed to the downfall of FTX, a prominent cryptocurrency exchange and one of Silvergate's key clients. Silvergate had no choice other than to wind down. They said that the choice to wind down its bank was deemed the optimal course of action, considering the recent industry and regulatory advancements. The bank further announced that its wind down and liquidation strategy encompasses complete reimbursement of all deposits. Then, multiple partners of the bank, including high-profile firms such as Coinbase, severed ties with Silvergate. We can understand why they did this and cannot blame them. Business is business, and business is not loyal in any way, shape, or form. Silvergate failed. Where will all these crypto companies go? We still don't know, but we do know there is a crypto crackdown happening. We know that the SEC, Congress, and the Biden administration are all directly attacking crypto because it is easy to do this, especially after the contagion. Earlier this year, regulatory authorities in the United States released a statement cautioning banks about the potential hazards associated with providing services to companies involved in cryptocurrency. However, leaders in the crypto industry voiced their disagreement with this evaluation, emphasizing that the downfall of Silvergate was primarily due to traditional banking risks rather than its involvement with cryptocurrency assets. According to Caitlin Long, the founder and CEO of Custodia Bank, if Silvergate had maintained sufficient cash deposits to fulfill customer withdrawal demands, it would have successfully withstood the bank's run without affecting its capitalization. The closure of Signature was met with significant controversy. Various sources indicate that the bank was not on the verge of insolvency and had successfully managed to stabilize its capital outflow prior to being taken over by U.S. regulators. Numerous individuals within the cryptocurrency industry viewed this action as a political move intended to drive crypto away from the United States. Despite facing regulatory scrutiny in the United States, the crypto industry is not deterring Kraken from pursuing its goal of establishing its own bank. Kraken will be opening its own bank. On a podcast, Kraken's chief legal officer Marco Santori said, quote, "Kraken Bank is very much on track to launch very soon. We're going to have those pens with the little ball chains. We're going to order thousands of them and attach them to the desks of Wall Street banks everywhere with our logo. Kraken will do this because to become a qualified custodian of crypto assets or even operate a decentralized crypto exchange in the United States of America, you have to be your own bank or align yourself with a bank. And we do know that banks are an enemy of crypto. Hence, Bitcoin was created. So maybe since Signature Bank and Silvergate are both gone, other crypto companies will use their services." On Thursday, the 9th of March, the cryptocurrency market experienced a decline in prices following the announcement of Silvergate. Bitcoin saw a decrease of 7% and was valued at $20,474.50, as reported by Coinmetrics. Ether also suffered a similar loss, with its current trading price standing at $1,440.45. The future of Bitcoin is uncertain, but it is clear that the cryptocurrency market is facing some challenges, and it doesn't look like it is going to end here. With the collapse of Silvergate and Signature Bank, we will see a lot of capitulation happen because these crypto companies cannot get banking services. Bitcoin is still essentially operating on a 4-year cycle, and crypto bros still believe we are in a bear market. However, this narrative could change because this cycle is a lot different from the previous cycles. Either way, if you are into Bitcoin or cryptocurrency, consider putting this in your trading or investing journal as a bearish signal and just make sure you are prepared if the price of Bitcoin gets pushed down. Anyway, that wasn't financial advice. Just a mere comment. You should always do your due diligence before making a decision. The collapse of Signature Bank and Silvergate will expose crypto firms to heightened regulatory scrutiny concerning their dependence on stablecoins and banking partnerships, rendering them more vulnerable. This development will also raise broader concerns about the conventional banking sector's interaction with the crypto industry. Silvergate was among the limited number of regulated financial institutions that offered banking services to crypto companies and exchanges. The downfall of Silvergate is expected to strengthen the arguments put forth by U.S. regulators, who believe cryptocurrencies threaten the traditional financial system. These are the largest banking failure since the financial crisis. With these banks holding crypto startups, millions of customers will be affected by the collapse. It's a sad time for the crypto industry as confidence has been shaken. This is the story of rapidly changing market conditions. Should crypto investors pull their funds and wait to see what happens or go bullish, hoping the bear market in Bitcoin's 4-year cycle will reward them? What do you think? Leave your thoughts in the comments below. If you found this video informative, like and subscribe for more. To conclude, Santori added on the podcast, quote, "Wall Street is going to be fine. Kraken and Coinbase are going to be okay. But the guy or gal who has a new idea about how to provide infrastructure to the crypto economy, it's going to be a really tough road over the next few years for them. No question. End."